Hello traders and welcome to another video review. Today is Tuesday, December 2nd, 2025. Let's take a look at the Forex economic calendar for today. Overnight session was quite easy with the data releases. We got building approvals from Australia down from 11% to minus 6.4, and the current account of Australia widens from minus 16.2 to minus 16.6. Nationwide HPI in the UK up from 0.2 to 0.3 and down on the yearly measure from 2.4 to 1.8. We are still waiting for the data from the Eurozone. CPI in the Eurozone is scheduled for this at 11 o'clock together with the core CPI and unemployment rate. Global daily trade price index from New Zealand is scheduled for release at 1 o'clock. At 4 o'clock during the US session we got JOLTS jobs openings, and then we got the FOMC member Bowman to give a speech. At 10:30 we got API weekly crude oil stock data, and at 11 o'clock AIG manufacturing index from the Australia. So that's calendar for today. Very light in data releases, so without any further ado, let's switch to the charts. We start with euro dollar. So 30-minute chart of the euro dollar is showing us deterioration from the recent swing high. Let's take a look what's going on here. We went as high as 1.1653, which is just 4 pips below the swing high at 1.1657. Bearish engulfing pattern just as it was done here, and we are back below the technical line here, technical resistance at 1.1616. Momentum went up towards the level of 67 points, almost hitting the extremely overbought conditions. So this movement here, despite the fact that looks quite nice and it keeps and the bulls keeps moving to the upside, is corrective in nature. That's not the impulsive wave progression, so we should see some sort of the downside movement below this trend line quite soon when the correction is completed. Let me just extend this trend line so you can see. There you go. So yesterday's bullish outlook for the euro today is rather more bearish, because there is a key technical resistance on the way of the bulls to move higher. Cable. Cable had tried to break above the resistance yet again. It made a local high, marginal local high 1.3274, and then bearish engulfing happened here towards the neutral market conditions, and we are down around the level of 1.3215. So right now we continue with this consolidation with way lower volume, way lower momentum as well, and the next target for the bears is the 100 periods moving average located at 1.3156. so please keep an eye on this level, as it looks like we are going to test this level when we break out of this consolidation. Bearish divergence can be spotted here as well between the swing highs and the highs on the momentum. US dollar versus the Japanese yen broke below the technical support, now resistance 155.76, and almost tested the nearest next technical support at 154.52. The market conditions hit the extremely oversold levels, and we are bouncing quite significantly yet again to test the technical resistance 155.75. Please notice the market is still trading below the trend line, and as long as it is trading below the trend line and below the technical resistance here, the outlook remains bearish, especially with this negative momentum. Only a sustained breakout above the trend line might resume the local uptrend towards 157.92. Otherwise, maybe the bears will fill the gap soon. For now, pullback towards the technical resistance on the US dollar versus the Japanese yen. Gold. The gold market doesn't do much. Just recently we went up to test the 4,244 technical resistance, barely broken 4,264, so $20 above, but the market conditions are now extremely overbought, and the market went lower. This movement to the downside ended up with the lows at 4,196, and the market is consolidating right now. Nevertheless, the momentum keeps moving lower, possibly towards the level of 50. The major technical support is located very closely to 100 periods moving average around 4,127. So movement to the upside, but not too much of a ground has been covered. S&P 500 keeps hovering around the trend line on a 4-hour time frame chart. Doesn't do much these days, as the momentum, as you can see, hit the extremely overbought conditions and then went straight down towards the level of 55 points. Market moved from the level of 6,851 towards 6,788, and it's consolidating, as I said, around this trend line. The next and nearest technical support is 6,770, the swing high from the November 20th. The outlook is still looking bullish, because we got very nice resumption of the uptrend and breakout above the trend line. Nevertheless, we don't have any new swing high. All right, so we need to break above 6,875 to hit the all-time high at 6,920, I guess. Yes. So for now, S&P 500 not doing much, consolidating around the trend line, moving up and down. Not too many things here. Crude oil doesn't do anything at all around the level of 60, as it is trading just below the trend line, as you can see. Let me just mark this trend line so you can see it. On a 4-hour time frame chart, the crude oil is still locked between this major levels, technical support and technical resistance. This is of course the support around 56.35, and as long as we trade below the trend line, the outlook remains bearish to sideways. There is not much going on here, and this one second, this been like that since the swing high on October 24th. So you can see that we are just moving around the 100 periods moving average below the trend line. Not much is going on here. This is not some sort of the pattern. Nevertheless, maybe there is some kind of a channel. Let me take a look. Well, it might be some sort of the channel if you apply it like that. Nevertheless, it's still very short time period of an uptrend, and then long period of slowly falling down inside of the channel. So all of this movement here to the upside are purely impulsive, and they are being faded during the next days. So not much is going on here on the crude oil around $60. We are waiting for the decisive breakout. Now Bitcoin, what is Bitcoin doing? We broke 61% Fibonacci retracement, so now this measurement is no longer valid because all of the major technical resistance, Fibonacci retracement levels has been violated. I'm talking about this swing low, this swing high, and this is the retracement. We have some sort of a nice resumption of the pullback movement to the upside from the extremely oversold conditions. So we got this bullish engulfing. Now there is another attempt to move higher. There's another attempt to move higher. What we need to do is to break above 87,346 level, and then at least test the technical resistance at 89,482 these days. Okay, and then possibly neutral level will be hit as well, and sooner or later maybe the breakout this big candle breakout level will be tested, 90,200, right? It should be tested sooner or later. For now, the situation of the bulls is quite hard after this movement to the downside, and we are waiting for the further developments. For now, pullbacks is in progress on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.